Okay, I believe we are live. So, welcome to Weekend Wind Down with Business Coach Nancy. Cheers to my guest, Danyel Harrison. Cheers, Danyel. I know you're drinking water. That's okay. You can cheers with me anyway.
Cheers.
Yeah, I'm excited for today because I'm going to take a sip first. We're going today to talk about bookkeeping, right? Everybody's nemesis. I mean, when I tell you so many of my clients, my coaching clients, just when they first come to me, they don't even know about their numbers. They don't know what their numbers are. They don't want to look at them. They're afraid to.
I get that a lot.
You get that a lot. So tell everybody your background and what you currently do.
Okay. So my background, non-career wise, I'm a wife and mother of three. A 14-year-old, a 3-year-old, and a 2-year-old. So there's a big span there.
I hear somebody in the background.
Yeah, they're going to be leaving here shortly. They're supposed to be going outside. That's what my little 2-year-old says.
That's all right. I got my dog on my lap. We never know what's going to happen.
Right. But career-wise, I am an accountant by trade. Started off in corporate accounting, but I was raised around a lot of entrepreneurs from my father, my brothers, my mother, just been kind of inundated with it for most of my life. And so when I got tired of the corporate drag, I was like, let me just go back to what I know and what I love, working with my small business owners. And so that's what my husband and I do now. That's what we do with Business Navigators. And we wanted to put a twist on it and not just really just be, the number crunchers or anything like that. A person I just talked with, she's an interior designer. We were talking on the phone and she was like, I thought I was talking to an accountant, not a therapist. So,
it really overlaps.
It does, yeah. But I really want to help people feel better about their numbers.
Okay, so you're also a Profit First professional, or you just tell me about that?
I am a certified Profit First professional. I don't know if let me show you my shirt. I'm wearing my shirt today.
Wow, Profit First professional.
Yes. So I use it in my business. We have this saying, my husband and I, that we don't practice what we preach what we practice. So we're putting these things in practice. We're doing these on a day-to-day basis. In fact, I have to do my allocations today. And then I show my clients how to do that, or I help them do it for them if they need that assistance.
Okay, so how long have you run, well, I'm sharing in my group, the Interior Design Business Forum as we're speaking. So if you see me looking around, it's because I have like the space station here.
Right.
So I want to get it into my group to make sure that it's broadcasting in there as well. And my computer's a little bit slow. So if you're here watching us, say hi to us. And if you have any bookkeeping questions, this is going to be the time to ask it. We're going to put Danyel on the spot. Okay, let me just write in here, come watch on my business page. Okay. All right. So let's get into it. Let's talk about when people come to you, what are they normally talking about?
They're usually mainly talking about what they do. As interior designers, they love to be out there talking with the clients, conceptualizing, dreaming up the spaces and, putting all that stuff together. And that's all the great activity. But when it comes to the numbers, they're very disconnected from those numbers.
Right. Now, some people have their accountants doing their bookkeeping. Also, some people have bookkeepers, but most interior designers in the beginning, they're, a one man or one woman show, and they're trying to do it all themselves.
Right.
So what can they do to get rid of the fear of numbers and actually understand what they're doing?
So first it starts with a mindset. And I would say, don't think of it as something different from what you do as far as the business. When you are selling, that's the first line on a financial statement, your profit and loss statement. So because that's the first line on that report, that's really important. Just like it's important to your business, it's important to your financials as well. That means there's cash coming into the business. So the more cash that's coming into the business, that means That's the first line on a financial statement, your problem. Is that you?
No, that was me because somebody said we're frozen. So I went to answer her and it went live on my thing. So my apologies.
That's okay.
Are we still frozen? Can someone tell us? I know there are people watching. And who's frozen? Leslie, I know you're the one who said we were frozen. Are we still frozen? Because that would be really weird because we seem to be live on. Give me 1 second. Let me just let me refresh the other page and see if we're still frozen. Okay, Maria says we're good. Okay, good. All right. So if we're still frozen for Leslie, I think it might be her computer. I'm not sure. Okay. I'm sorry, Danielle. Go ahead.
That's okay.
Keep going.
No, so don't think of it as something like different and separate from the business, like it's just over in the corner. And basically, like I was saying, is just like sales are important and getting the project right for that customer is really important. An indicator that you've gotten that right is when they pay you and that you've got that money in your bank to be able to run the rest of your business. The more that you have coming in, that's a good indicator that, yeah, my clients love me, they love the service that I'm providing, and they're telling other people about what I'm doing. So that's how I try and relate that, show people how you really need to start connecting the bookkeeping with the rest of your business, not like it's something off. Basically a stepchild or something.
Right. And you know what? I'm going to say it straight out. If you don't know your numbers or you're not looking at your numbers or you're not dealing with your numbers, then you are not being a good business owner right now in this moment in time. But that doesn't mean it can't change.
That's right.
And you don't have to be scared of it. And believe me, I was one of those, like totally scared of my numbers. I still email my accountant probably way too much to say, what does this mean? And what is that all about? But when I started actually looking at my own QuickBooks, and here's another thing, if you use QuickBooks, know your own sign-on, right?
Yes.
I mean, I have so many clients where I say, what are your numbers? I don't know, my accountant does that or my bookkeeper does that. I'm like, well, don't you have your sign-on? Because even if your bookkeeper and your accountant are doing some of the work, you should still be looking at your bank accounts and at your numbers.
I agree.
Right.
One of the things that I also like to say is even if you do have a bookkeeper and accountant, you should have a relationship with them. They're part of your team. So it shouldn't be the only time you talk to them is as it gets close to tax time or it's time for quarterly estimates or things like that. Have a conversation with them just like you want that relationship with your customers, with your clients that you're doing these projects for. Have that same type of relationship with your bookkeeper, with your accountant. Ask them questions. You're not digging in and accusing them of doing something wrong, but you're wanting to get a better comfort level with your finances. And the only way you can do that is to ask those questions.
But sometimes the accountants or that I find people are talking about their accountants kind of like they're a little scared of them.
And that's a bit of our fault as the accounting industry. But I would say if you try to establish and create that relationship or, open up that channel of communication with your accounting professional and they're not willing to reciprocate, then you really should probably look for somebody else if they're not willing to have that relationship with you, because this is your business. This is about you and your success, not them. I mean, they're looking after their business, but this is you and your business. So if they don't care about your business the way you do, then you should find somebody else to work with, in my honest opinion.
Absolutely. So out of the people who are watching, and if you're watching in the group, in the Interior Design Business Forum, come on over to my business page and watch from there. This way, when you comment, I can actually see your comments and I can share them here. Because if you're watching on that page, I can't share the comments, although I'm looking. I know Heather's over there. Heather, come on over to the business page, Nancy Gansikoffer Business Coach on Facebook. This way you can watch. So people who are watching, how many of you currently have an accountant that you love? And then we're going to ask them about their bookkeepers. Because I do find often that it starts where their accountant is doing the taxes and kind of the quarterly, but they are still in charge of doing the
Bookkeeping.
the bookkeeping, right? So let's talk about the difference between the bookkeeping and the accounting. Let's talk about bookkeeping while people are weighing in here.
Okay, so bookkeeping, I will first start off and say, even though no one really cares for it, it is very important. Without that first layer, nobody else can do what they need to do. The accountant can't do what they need to do. You can't really do what you need to do until you have your bookkeeping in place. So that encompasses categorizing the transactions that have happened, the activities that have happened in your business. So anytime you're doing something in your business, it's creating a financial transaction. When you are driving from your home to to a prospect's place or to a client's place, that's a taxable event, and it's a transaction that should be recorded in a certain way. If you're taking somebody out to eat for a business luncheon, that's a business transaction. When you're going and sourcing supplies, the materials, you're working with the subcontractor. These are all activities that are putting together your project, but they're also creating financial transactions, and so they need to be categorized appropriately so that your accountant, or even you, when you look at your profit and loss statement, your balance sheet, maybe if you're looking at a cash flow statement, you can understand what is it taking to move your business forward.
So every time you're charging something on your business credit card,
or a bank card,
that's tied to your business account.
Yes,
Okay.
yes, please.
Because there are plenty of people who are still using their personal accounts
For their
business expenses. And honestly, doesn't that screw up your bookkeeping?
It does. I would say with that, even if you don't have a business account set up, have a separate account. So, for example, when our business got started, and I'm an accountant, we were basically a sole proprietorship. So, I am the business. But I didn't start running things out of my personal account that we used for home. I had another personal account that was only used for business activity. So that's how I started with our business. And then as we grew, it was just a few months later, I opened up my business checking accounts because we set up our LLC, and we're moving forward from there. But that's one way to do that as well, is set up a separate personal account and run all of your business transactions through there. Don't commingle personal and business transactions together in the same.
Oh my God, I did that for years. My accountant was ready to kill me. I really did. I was just like, well, the only card I had on me was my business account when I was at the food store. And then, I just finally, only a couple of years ago, I said, okay, I'm not doing this anymore.
Right.
Business, I'm a corporation. So if it's business, I'm putting in my business card. If it's personal, because he had to keep making adjustments, I guess, at the end of the year for my tax return, and it just cost him so much more time.
And it's not just about the time that it costs us on the accountant side, but it's about you as the business owner. Because again, it goes back to this mentality thing. When you're working a job, you have this paycheck that's coming in, and then you have to use that paycheck for the things to take care of your personal life. When we become business owners, somehow we forget about what it used to be our life used to be like to have a paycheck. And so we just start doing everything out of this one jumbled, pot, basically. But no matter what entity you are, you could be a sole proprietor, you could be a partnership, you could be a S corp, you could be a C corp. When you start from wherever you are and treat your business that's its own baby, separate from you, then you can go faster and you can go further.
Okay, so who wants to admit whether they're still commingling funds? if you are, you could say,
no judgment. But send me a message so we can help you get that straightened out now than later.
So, all right, let's talk first about, so everyone's phobias of numbers, it kind of goes hand in hand sometimes with being creative. Right. They feel like they're not capable of understanding their numbers, which is just not true. Mm-hmm. It's really the mindset, like you said, of making the commitment to make it part of your business. I mean, you're doing the estimates, you're billing people, And when the money comes in, you just sort of like, oh, well, I put it in my bank account and now I can actually forget it.
Right.
So what do they do to change that around?
That's where I think an easy way to change that around is using the profit first system. So one of my interior designers, she of course had a phobia around numbers. And as soon as we put the profit first system in place where she could separate everything, she looks forward to doing her allocations. She looks forward to looking at her bank account, and now I see what I'm paying myself. I see what I can do with my business, and I don't feel like I'm in this jumbled mess. It's not so much that she can read the P&L like a rock star just yet or anything like that, and that's okay. But the same thing that she sees in her bank account now is pretty close to what her P&L is, so she's not too far off. And then we can have that that communication, and I can bridge that gap for her. But she's in a lot better place now because she's put that easy framework in place at her bank account and at her bank account level.
Okay, so I will tell you, I'm familiar with Profit First. Mm-hmm. What I teach my clients, my one-on-one clients and my group clients, are a Profit First light system. Mm-hmm. Because I always feel like Profit First, when I tried to implement Profit First, I was like, okay, I totally get it. I think it's a great system. But right. What I want everyone to understand is it's more like a psychological system.
Yes.
Than it is an accounting system, right? My accountant wanted to kill me. He was just like, this is stupid, he said to me, or something close to that. And if he's watching,
I get that a lot.
Right. Sorry, John, if you're watching, but you know what? He was just like, P&L is profit and loss. Lara, I meant to clarify that because it's all right when it's P and L, profit and loss statement. Yes. So it's your balance sheet and your profit and loss statement. And one of the things I did for my clients, they get access into my membership site, is I have all these extra trainings. And Peter Lang, designer CPA, he did an extra training in my membership site on how to read your profit and loss statement and how to read your balance sheet. So all my clients have access to that because
that's awesome.
And it is a little overwhelming. And I always say, watch it once, absorb what you can, watch it again, you'll absorb a little bit more. And eventually you will actually be the CEO of your company and understand your numbers.
Yes,
which is important. Right. But the bookkeeping aspect of it is you bill a client for Profit First. You bill a client, the money comes in against an invoice.
Right.
Now, in the case of interior designers, it is complicated because some of that invoice is for product and money you have to pay out to someone else.
Right.
Some of that invoice is your margin on the product that you added to the price. Some of it could be design fee. Some of it could be shipping and handling. Some of it could be sales tax. And what the Profit First system basically does is say, when you bring in that invoice, break it down and move it into applicable accounts that represent each piece of that invoice, right? So that you know where that money is allocated for taxes, or I call it a pass-through account. I know that's not what Profit First calls it.
That's okay.
And then the reason why it's called Profit First is you take the net, the real income, and you actually take a percentage of that and put it in a profit account for yourself. So explain to everybody what that profit account is really supposed to be for.
So just like if you were to invest in, let's see, what's a big company? Maybe you had stock in IKEA. Each quarter, IKEA would send you, if they've done really well this quarter, they would send you a stock dividend. And it's, basically, hey, thank you for investing in us. Here's how we say thank you. So the Profit First system basically says, no matter where you are in your journey as an entrepreneur, your business should be doing the same thing for you. Each quarter, your business basically pays you a stock dividend, saying, hey, you did really well this quarter. Here, go celebrate. There's a lot of cool things that you can do with some of that profit in that account. Maybe if you've got some debt in the business, you can start snowballing and paying off that debt. If you're wanting to save up, maybe there's a new employee that you want to get, you can start using that to save up, and that's your space to hire a new designer or maybe a new assistant designer. Maybe you're looking to go move into a location. Maybe you're out working out of your home and you want a showroom or something like that. So it gives you a lot of options as to how you can maneuver with that profit account.
So now I was told, and I have a profit first sub coach that works in my business, that when my clients get to a certain level, I get one session with her. So this way she can just teach them a little bit more about their numbers.
Right.
But part of what I understand about profit first, and I'm like you, I'm like, oh, my profit account is accumulating. Let me pay off that credit card that is in the business, or let me think about buying another level of, learning or coaching for myself and for my staff, or bring on another person. But I was told technically the profit account is supposed to be taken out quarterly. And like you said in the beginning, it's like your stock dividend for your own business. So you're paying yourself a salary, and that accumulation of that profit is kind of like your reward for being the owner of your company.
Exactly. And
but at the same time, I want to reinvest it back in. Like I can't help it. I'm like, that's always what I've done. But should I do that?
So the profit account is about making sure you're in a great place so that you can continue to give to your business. So it's not so much that you can't reinvest into the business, but a lot of times instead of pulling the money out, and we're depriving ourselves instead of supporting ourselves as business owners. So that's kind of the difference there. It's not so much that you can't leave the money there. You don't take out everything in there. So say if you've got $5,000 in your profit account, at the end of the quarter, you take out 50% of that, you leave the other 50% there. That half of that, the $2,500, you would take that out, and that would be for yourself, either to, like I said, go celebrate, or if there is some business debt or some other big initiative that you have going on, you apply it towards that initiative. The other money that's staying in your account begins to grow, and eventually it becomes like a savings account for your business. So just like you personally should have maybe 6 months or so of savings for your personal lifestyle, you could begin building the same thing for your business, because God forbid something should happen to you and you have to step away for a little bit, but you've still got ongoing business, bills that come in. All of that can be taken care of while you're away, and then you can come back and it's like nothing ever happened.
Okay. All right. So Gisela said, I learned to use YNAB. Does anyone know what that is? I don't know what that is.
I've seen that before. I can't think of, I want to say it's kind of like a money management tool, kind of like Mint or something like that.
All right, Gisela, let us know. And profit first. And it's wonderful. I don't have to worry about where my money is. It's so true. I have to tell you that it's so empowering I do 4 bank accounts. Some of my designers do 4, some have to have 5 because they bring in large retainers. That some of the larger design firms bring in large retainers and don't apply it to their income until they start billing against it. But most of them, I say, you have your operating expense account, have a tax account. And I know Profit First normally has 2 tax accounts, personal tax and sales tax.
Sales tax.
Right.
If that applies to you.
I say just combine them and put all your taxes in one place. So you know when the tax man comes knocking at the door, whether it's for your income tax or whether it's for sales tax, you know you have that money separated out.
Exactly.
And you don't have an overinflated primary operating expense account. I love when I have clients, I'm like, how much do you have in your account? You have one bank account? Yes. How much you have in there? And I'll just throw out a number, 50,000. How much of that do you owe out to furniture companies? They're like,
I don't know.
I'm not sure. Maybe I can run a report from there, but to me, when you wake up in the morning and maybe your overhead is only $5,000 a month and you're like, I'm rich. I have $50,000, but they don't realize that 35,000 of that is owed to someone else, a work industry partner, or for furniture, and then the tax, and then you get your bill from your accountant or from your professional services of any kind, and suddenly you're down to 5,000 again.
Right. So usually what I do with my clients is we have what's called I have them create a mass account. And so that stands for materials and subs. And And so that's where they move the money, like when they get there, whether it's a deposit or it's, an invoice that they're collecting payment on, they'll move the money that's associated with material costs or subcontract costs into that account. And then what's left after that is what gets allocated to your other accounts.
Right, right. So if you know that money's going out, you take it out first.
Yes.
And you take the sales tax out.
Yes, and so they can either leave that in that mass account since it's associated with material purchases, most likely, unless they have to charge sales tax on their services as well. But you can either leave it there. I do have one client that she puts it in her tax account as well. So she's got her money that she allocates for her personal taxes and sales tax in the same account.
Okay. All right. So Maria is asking, is the profit account where you pay yourself from? I know the answer, but you.
No. So you have what's called an owner pay account or owner compensation. This is where you pay yourself from. With that account, you can either pull draws out of that account to support yourself. But what I would like for you to do, or suggest that you do, is set a salary for yourself, even if you're not on payroll. Say if you need to pull $2,000 each month or each 2 weeks or whatever the case may be to support your lifestyle, then pull that money out. If there's still money in the owner pay account, let it stay there and let it build. Because you're going to have fluctuating months. You can have months where you don't have as much in there. And so if you let that account build up, then you can always pay yourself pretty consistently.
So don't they eventually have to pay the piper though if they're just taking drawers out of their account and rather than putting themselves on payroll?
Yes, but that's going to be associated with the way your business is set up from a tax perspective. And at the same time, if you have your tax account set up and you're allocating to that tax account, then either way, you kind of have yourself covered. At that point, if you have a lot of taxes being assessed on your profitability, then it's time to get a tax plan with your accountant so they can start structuring your business better.
Okay, so this gets really confusing, which is why I probably oversimplify it. But to me, it clarifies for people that, again, what I teach when it comes to the bookkeeping is you're either going to have 4 or 5 accounts. If you take very large retainers where you've yet to invoice against anything, you're just like, to start the job, I need $50,000, and you need to put that into a retainer account. And I always name it what they understand it to be.
Exactly.
Okay. Now let's say you're starting to build them. And like I said before, you get the money in. I'm just reading a question by Camille. Let me make sure I don't move forward without. You were saying you have 4 accounts and some designers have 5. The first is an operating expense account, the second a tax account, the third. Okay. So the way I teach my clients is the first one is the operating expense account. Second is a tax account. Third is a pass-through account, which I know Danyel has different names for it, and it doesn't matter the name as long it's passing through to furniture companies or workmen, industry partners that you're paying. And you called that?
MAS, material and subs.
Material and subs. Okay. Some people call it COGS, cost of goods sold also.
Yes.
Right? So I don't care what you name it as long as you understand it.
Understand its function. Yeah.
Exactly. And the fourth account is your profit account. So money comes in, I say, and I'm going to let Danyel explain exactly the full profit first system, but I do what's like a profit first light with my clients because sometimes I find 7 accounts freaks them out, but 4 they seem to be able to be comfortable with. Your money comes in, it's paying against an invoice. You're taking out the tax that you charged on that invoice. You're putting it in the tax account. You're taking out whatever's due to other people, other companies for furniture. Cost of goods sold is the same thing, or any sub, and you're taking out and you're putting it into your pass-through account. What's left should be any design fee or any margin on your product. Then that's your real income on that invoice. Then you're taking a percent of that. 5% is usually where we start for a design firm that's under about $250,000 a year. Take
Right.
5% out and put it in a profit account, and the remaining is your operating expense account. And that's where, in what I train my clients for, that's where they pay themselves out of. That's where they pay their rent out of. That's where they pay their employees out of. And that's where we say, okay, now let's compare that to your expenses and see how much you actually need in there if you want to accumulate. Okay. And then at the end of the quarter, the profit, you can take it out. That's what you're supposed to do to reward yourself as being the owner of the company. That's your, as Danielle said, it's kind of like a little stock investment in your own company. I love that. And then you continue to accumulate it for the next quarter. Or occasionally, if you're in debt or you want to invest in something really special, you have that profit account as an additional cushion in your business. But can you imagine waking up every morning, looking at your phone, looking at your 4 bank accounts, and looking at your operating expense account and knowing exactly how much you actually have in your business instead of seeing this overinflated?
Exactly.
Right? So
Yes.
explain that. So that's how I teach my clients. But the full profit first is 7 accounts?
Well, the basic, just the kind of basic profit first is 5 accounts. So your first account is what's called income. This is where all the money gets deposited to. And this is the only thing that happens in this account. All the money is collected in this account, basically. It's where you collect everything. From that account, if you have, like you said, if you have a significant amount of material and sub cost, then you might have a pass-through account, like you called it. And then after that pass-through account, then you take what's left from the income and you would distribute it by a percentage to 4 accounts. Those 4 accounts are your profit account,
Okay.
your owner pay account, your tax account, and then your operating expense. That's really the order that you should be allocating your funds to. Once you've got the money in place, then you go to your operating expense account and you begin to pay your bills that you need to pay for the business.
And your owner's pays out in the real profit first system, the full system, your owner's pay is separate. So you always know you have enough money to pay yourself.
Yes. And you always pull yourself out first. So a lot of times business owners are like, you're paying the employees, you're paying, all of your overhead expenses and everything like that. You take care of all that first, and then you kind of see what's left and you pull out what's left.
Yes. Everybody does that. It's crazy.
It is, and you are super stressed out. And then a lot of times you end up overdrawing from the account because you don't know where you are. I have a client that we've finally he's finally seen the light and he started to follow the process that I've put in place. And he's like, you know what? I'm so glad we did this. We should have done this a long time ago. Now he doesn't stress as much. He doesn't even look at his bank account as often as he used to. Now he actually has a clearer picture of what's going on.
I love that because it really does make a huge difference in your stress level and your anxiety level when you start splitting the money up, because like I said, it's really more of a psychological system than it is an accounting system.
Right.
But it also ensures that as the owner, you're taking care of yourself first, guys. I mean, you work so hard,
Yes.
Yet you pay yourselves last. Because I know what you're thinking, well, I can't do this job without my staff, so I have to pay them first. I'm responsible for them. But if you actually, it's a mindset, like Danielle said, if you switch your mindset and say, I'm going to pay myself first,
then you can pay your staff. That's how I tell people, you're not paying yourself because it's selfish. You're paying yourself because it's a necessity. You can't really support your business effectively until you take care of yourself first.
Right. So if they do, first I want to talk about if they're doing it themselves, how often do they have to do this? What do you recommend? How do they manage this whole process? They get, let's say they get, 10, well, it'd be nice if they got 10 paid invoices a week. Some of you do, some of you don't.
Right.
When do you do your bookkeeping? What do you suggest? And then we'll talk about what you actually do for them.
So it depends. In the book, if you follow the process, it's recommended to do your allocations, and you could sit down and do your bookkeeping as well on the same days, on the 10th and the 25th. For some people, I always say the important thing is about establishing a rhythm and making sure that you're in charge of your finances and not your finances in charge of you. So with that being said, sometimes it might be best to do it weekly. And if you're going to do it weekly, pick one day and make sure you do it that same day every week. So that way you're changing your frame of mind. You're not in a panic. You're sitting down and you are in control of what's going to happen with your money.
But what do? They print out every invoice that got paid and then look at it and figure out where everything goes. What do you recommend?
So
or one system like Ivy or Mydoma or Studio Designer.
So if you're going to do it yourself, what I would recommend first is you go look at your income account and see what receipts you've gotten. So based on those receipts, you can deposit money all throughout the week, all throughout the month. When it comes to the day that you're supposed to sit down and do your profit first system, then you go look in that income account, and that's why it's really important to just have that account where it's just collecting the funds. Look in there and see what you deposited. And then, yes, you can go pull those invoices so that you can pull together and see, okay, of these invoices that I've deposited, this percent, maybe you either do it on a percentage. For some people, they recognize that their material and sub cost is really about 80% of their money that they bring in. So you might allocate, just take out about 80% of that. For some people, you want to see the exact number. So go back to those invoices and pull out what is the material and sub cost. And then take that out of the collection bin, basically, and then allocate what's remaining.
I have to tell you, it's really hard for designers to give a certain percentage and just across the board. I'm just looking at my comments. Things stopped scrolling. And again, I've worked with a Profit First coach with some of my clients, a Profit First professional, and she's always trying to tie them down to a specific percentage. And it's really hard, right? Because I know what I teach my clients to put the margin on their furnishings when they can, but then sometimes they just can't because they're, filling in just the finishing touches and they're shopping local at the Home Goods, so they can't have a high percentage on there. And when they're doing custom work, the percentage might be a little higher. So it's very hard to take one invoice and say, 40% profit margin on every product that's on this. They really need to go back to their system, or when they're billing it, they need to somewhere make a notation how much of that invoice was for cost of goods.
Right. And so this is where it becomes really important when you go back to your bookkeeping and you're setting up your chart of accounts, because then it makes it really easy for you to identify if you have everything in the right bucket as far as your accounts are concerned. So maybe you have a consultancy fee, and that's what that account is called. You have your design fee, you have your purchases, and that's what that's called. And that way it's easy for you to just run a report and see, okay, this is what this amount is. You can run it for a particular period of time based on the deposits that you've made. And so it makes it easy for you to identify those numbers. But I definitely get it. I don't do that. I don't apply a percentage to my design clients either. We usually look at the invoices and go from there when making the allocations.
Okay, so I don't know where you're located, but where are you located?
I am in Kansas.
You're in Kansas. Okay. Yep. Because there's been this ongoing question, and I just want to let my steady watchers know that I did reach out to Peter Lang over this tax question. It keeps coming up whenever I talk about numbers on Weekend Wind Down, because in some locations now, Sharon said, and then managing when you have been charged sales tax already and when you have not. So what's happening in some states, I think Florida is one of them. If anyone knows if I'm right or wrong, let me know. They are now charging the designers the sales tax on products that they purchase. But then the designer is also charging the client sales tax on the full price that they're charging the client. And something just does not make sense in my head, because that's the state double dipping on taxes.
Yeah, because usually the sales tax is applied to the end user. And so if the designer is not the end user of the product, then they should be collecting the sales tax from the designer when the designer collects it from the customer.
Right. So this question came up last week or the week before, and I said, "Oh, I got to see if Peter Lang CPA could come on and clarify for us." But it's different from state to state, so it really is hard for the designers to keep track. And as rules change, how do you keep track of it? So, what do you do now for your design clients or for any small business owner? Like, what happens if you're in Kansas and they're in New York or they're in Florida? How do you keep up on all the
changes? So a lot of that just has to do with whether someone is in that location or they're not. They're still going to have to do research. Even if I lived in Florida, I don't have a crystal globe to instantly know what happens in Florida the minute something changes. So I'm going to have to go research it. Now I might be a bit more familiar with it because if I live down there, but I still have to do the same thing whether I'm in Florida or I'm in Kansas. So that's what I could tell all my clients. My clients that live in California. I've got clients that are in Georgia. I've worked with people on the East Coast as well. So I just have to go research it, or I have a network of people that I can rely on and get that help me pull that information together. But at the end of the day, it's all about supporting me, the business owner.
So you love numbers.
I do.
It's so hard for me to wrap my brain around that. So when you first take on a client, how does it work? How do you onboard somebody?
So we're going to get a clear understanding of what they need. For me, it's not about trying to sell them on bookkeeping. Bookkeeping is a tool. It's part of what we need to do in order to get you the result that you're looking for. So that's where we start first, is we understand what is it you want to accomplish. Is this business a lifestyle business for you, or are you trying to build a legacy? Are you trying to incorporate eventually? Do you want to become this massive design firm? What are your goals? Based on those goals, then we say, okay, where are you right now? How do we get from where you are right now to where you want to be? And that's how we design what your package is going to look like.
Okay.
So for some, I'm consulting with them on their bookkeeping. For some of them, I may be doing it for them. For some, it's just mainly they may have a bookkeeper already, but they don't have a good relationship. So I'm all about helping you establish better relationships with your accounting professional. I want you to have a good team supporting you.
So you can actually train them to do their own bookkeeping. And then I want to go back to some comments. Like if you say, if they call you and go, I want to do my own, but I just don't have a good system set up.
Yes, actually, for some people, depending on where you are on a revenue level, I actually recommend it. Like I said, you should have a certain level of comfortability with your numbers. And when a lot of times you may feel like I can't do this, but it's more of disorganization that may be in the business, or again, your mindset that prevents you from doing it yourself. But it can be very cost effective to just get the training and do it yourself. And then when you get to maybe like 300,000 to 500,000 above, then it's time to start maybe looking at outsourcing some of these activities.
And this is such a good point, because I get such a range of people who go, I know I have to spend money to make money, and this is not my genius zone, so I just want to give it to someone else. And when I look at their income, I'm like, you really need to do it yourself. Right. Like it's not time to pay somebody else yet. Besides the fact, pretty much on everything that I've ever outsourced, minus maybe one thing, I wanted to learn about it before I outsourced it.
Yes.
Because otherwise, I don't really understand what I'm paying for, and I don't know what to expect of that person. And often, if you do that and you just hand it over blindly, you don't really understand what it takes to get that job done, and you could get very ripped off.
Right. Yes. So it's about protecting yourself. You don't want to go into a relationship thinking that you're going to get fleeced, but it is a reality, and it's something that you should protect yourself from as much as possible. But the other thing is that you can't hand something off to somebody else and you don't have a basic understanding of it. And I kind of equate this type of service where I'm training somebody as kind of like your DIY service, because you have clients that come to you and they're not in a place where they need a full design project. And so the DIY is a great niche specific service that helps target a lot of different customers that could use your service and then maybe eventually grow from there.
You know, you're in my group and you see me talking about my designer for a day contracts for $27 and then designer on call.
Yes.
And full service design. And this is exactly why what you just said, because if your pipeline's not full with full service design and that's all you want, but you are missing the opportunity to work with some do-it-yourselfers to make some money, it's a great service to have.
Right.
In order to get more exposure to more people that someday may have enough money, or people that will, talk about you and get you the clients you want. So you do the same thing. You basically will work with do-it-yourselfers and train them on what to do. And when they get large enough where they want to hand it off and they're making enough money, you are already familiar and they know you and like you because you've helped them establish a successful bookkeeping system for themselves. I love that. Thank you for doing that. That makes so much sense. Let me just go back to some questions. Oh, this tax question keeps coming up. Okay, Maria said we froze on her, but that's definitely her computer. True, for most retail purchases, we make with our discount too. Yeah, I mean, that's basically when we were talking about, how they're not making as much money. Gisela, I'm in Florida, and in order not to pay sales tax from vendors, you have to have a Florida resale certificate. And that's true, Gisela, everywhere. However, I had heard there might have been a change in Florida. So let's see what Lara is saying, because she seems to give a pretty full explanation here. So if you already paid $100 in taxes to the vendor and then charge the client $150 in tax for the price you sold it to them for, does that mean you would just pay $50 in taxes since you already paid $100? That's what I'm trying to figure out. I'm not sure we have an answer for that, do we, Danielle?
Not right now. Like I said, I have to go and research it. And I mean, a lot of times when big things like this come up, you don't want to get your answer from passing conversation. You want to, maybe if you need to have a sit down with somebody, and that's another thing I need to bring up when you're asking me, how do I work with people? So even though I'm in Kansas, I have clients in Kansas, and we do meetings just like this. We Zoom, and I share my information with them. They share their information with me. So that's how I hold my meetings when I have clients that are not, in my local area or anything like that. But that's what I would suggest. If this is something that's a concern in your area, then it's time to have a conversation with a professional, not necessarily just Google everything.
It's so true. And this is coming up consistently with Florida designers. So something has changed there. You can Google it, but you're probably better off. And again, I'm trying to get Peter Lang on. He agreed to come on in my group. He's actually going to, since I'm booked out for weekend wind down till like the end of December, I think at this point.
That's great.
And this is a pretty hot topic. I had asked him if he would go live with me in the Interior Design Business Forum group to discuss this tax issue. And he said yes, but we haven't picked our date yet. So I will let you know. So, okay. So you will train them on helping them get an organized system for themselves if they want to continue to do their bookkeeping in the state of their business right now, whether they're a baby designer or just a couple of years in and not quite over that hump yet where they feel like they can hire somebody, or you can do their bookkeeping for them.
Correct.
Okay. How do you work with systems when they have a system like Studio Designer or Ivy or MyDoma or any of these other systems? Do you know how to work in those yet? Do you have any clients on those? Does it matter to you?
It does not matter to me. So our business Navigators is kind of system agnostic. As far as accounting platform is concerned, if I have my choice and the client doesn't have a real preference one way or the other, then we use Xero accounting. I really like that.
What does that? Say that again.
Xero, Xero, Xero accounting.
Mm-hmm.
But I have QuickBooks as well. I have clients that I work with in QuickBooks Online, or I tend to steer clear of desktop, but I can work in desktop as well.
I know I have I have people who are still on desktop QuickBooks, and again, it's usually their accountant who refuses to move.
Yeah, and that's what I see a lot. It's about you need to have flexibility in your business, and especially designers are always on the go. So you want to have something, especially if you're going to be doing the bookkeeping yourself. You want to have tools in place that allow it to be kind of part of your day. Like you don't need to sit down and you've got like mounds of paper that you need to go through in order to do your bookkeeping. So we try and there's a lot of cool apps that I use and I teach my clients how to use that help capture the receipts. It'll kind of do part of the work for you. So you're doing more review, not actually having to physically categorize or data entry and stuff like that. That's usually what people don't like.
What apps capture your receipts?
There is a cool app called HubDoc, HUB as in boy, Doc, DOC.
And it's just a picture? I mean, I just take pictures of them.
But so it'll take it connects with Xero and it connects with QuickBooks. You take a picture of that document and HubDoc will store it in its own system. And then if it's connected to your accounting, you can also have it push automatically to your accounting system. So you have it stored in two places, and then you can throw that receipt away. So
that's very cool. So you're telling me HubDoc can be hooked up to QuickBooks and it then sends it to QuickBooks. You still have to go in though and categorize it.
Actually, you can categorize it in HubDoc, and it actually has a feature there where if it's, say, if you always go to the same place, you're always going to this one tile store, and you're always, it'll capture all of those things from that one vendor in a folder under that vendor name. And then as you start categorizing things in HubDoc, it'll start picking that up and it'll automatically say, hey, this is where you categorized the last one. Do you want us to push it to QuickBooks as this? And you just say yes, or you can put it on auto and it'll automatically, you don't even have to touch it. It'll automatically code that same transaction every time. And so when you get into QuickBooks and you need to reconcile, which I encourage everybody to reconcile your book every month.
Thank God for my accountant who does my bookkeeping. I don't even reconcile my personal checkbook anymore. No, does anybody reconcile their personal checkbook anymore?
Well, I don't reconcile my personal checking. I'd reconcile my business account, but I don't do my personal account like that. But I keep track of my personal stuff pretty.
Okay, but I'm confused. Because if you're using HubDoc, taking a picture of your receipts, categorizing it, but then you're also charging it to your credit card, isn't it coming over from your credit card? So aren't the transactions sweeping into your online QuickBooks from the credit card and then also from HubDoc?
So when your transactions come in from your bank or from a credit card, a credit card is really like transactions coming from the bank. That's how, from a bookkeeper standpoint, that's how we're going to treat it. It's going to be connected like a bank account, and all the transactions are going to flow in there. So when the bank account transaction happens, that's kind of secondary. The first time this transaction happened is when you got that receipt, when you made that purchase.
Okay.
So the important thing about the receipts is because that's kind of like a third-party verification that this happened. This isn't you just kind of moving money around or trying to finagle this into calling it a business expense. Mm-hmm. So that's why you don't want to just categorize what's in your bank account and you don't have receipts to support it.
Okay.
Because the receipt is really the source of truth.
So if we ever get audited, those receipts are very important. Right.
And that's why having something like HubDoc is really helpful, because then you don't have to keep track of all these receipts, which will eventually, if you buy something in January, by the time you get to January the next year, you need to work on the taxes, that receipt is faded and you have no idea what it said.
Yeah. And I haven't written on it like it was a business dinner, or I haven't categorized it at all.
And that's another cool thing you can do with the HubDoc. It's got a place where you can make notes on the document. So you can make a quick note on there. You can put tags on it. So if you want to start kind of keeping track of either by customer or maybe by activity, maybe if this is COGS related, you can put a tag on there that says COGS. If this is business operating expense, you can put a tag on there that says business operating. If this is something that's related to you, the owner, you can put a tag on it that says owner.
Interesting. I've got to look this up. I've never heard of it, but it sounded similar to what was it Gisela said before that with that acronym we didn't understand?
YNA.
She ended up saying it is an app.
Yeah, I've heard of the name, but I kind of think it's kind of like a personal finance tool, if I remember correctly.
So maybe it can be used a little bit for business too, but it sounds like HubDoc is meant to do exactly what, for business, right?
Right.
Okay. So tell everyone how they find you and what's the onboarding process when you first meet them. Do you have a free consult first? How does that work?
Yes. So one, you can find me on my Facebook page at Business Navigators, LLC. You can go to my personal page and send me a message there as well. My email address is B as in boy, I, Z as in zebra, N as in Nancy, A, V as in Victor, I, 17 at gmail.com.
Okay, you're so putting that in comments when we're done because no one could get that.
That's fine. But those are the ways that you can connect with me. My phone number is on my Facebook business page. But my first initial meeting with the prospect is a free meeting. We usually talk for about 45 minutes. Sometimes it goes a little bit longer than that. Just kind of depends on how we're feeling each other. If we decide that we are a good fit for one another, then I send you our engagement, what we talked about and what we agreed on. We sign through that, just kind of like what you do with the design client. And then we start getting our processes set up for you. So if there's, I have cloud storage space, I start setting up your access to, so that we can connect with each other. We'll book our appointments. So if we're going to I have some clients that I talk to weekly, some text me daily. So however often we're going to be communicating, we set up that platform and we just get started.
Okay. And some of them text you daily. I love that because I have that too sometimes. And I always tell my interior design clients, if you don't want that, then make sure you put it in your contract that there is no texting.
Exactly.
But, depending on the level of client, they actually get texting access to me. So it kind of keeps me involved. So it's all good. Now, what do you say to someone who's like, well, do you have to have access to my bank accounts? And how do they keep themselves secure?
I do not have to have access to your bank account. That's where we have features like the HubDoc, which allows both of us to be connected to this application. And you can actually sign into your bank and it'll pull in the bank statements for me. So I don't have to bug you all the time to give me the bank statements.
Okay.
But yeah, you need a budget. That's what that's called. Thank you.
You need a budget. Thank you. Gisela, is it free? And also, Danyel, is HubDoc free or
HubDoc is not free, but it is $20 per month and it's unlimited use for it.
Okay. Okay. So it's probably similar to you need a budget app.
Probably. Yeah.
Okay. Okay.
But if you do have an accountant that needs access to your bank account, there is a way that you can give them access without you can give them kind of read only access to your bank account. That way they can't make any transactions. I do have some clients where I do kind of more CFO treasury level stuff where I am helping them kind of move money around. And so in those cases, you want to make sure that your accountant has their own login. So don't share logins with any other professionals. And what that does is it protects you and it also gives you an audit trail. So whenever you log into your account, you can see so-and-so did this and so-and-so did that. But if everybody is under your account, your name, then you can't tell when you logged in versus somebody else logged in.
And that is, I mean, I've been guilty of that in the past because they charge some programs charge extra for 2 users, 3 users, 4 users. So everyone just is your own. We have one final question and then we got to go because it's 5:30. So can we write off expenses on home renovations and decorating at our own homes if we're using our photos to build our portfolio and our website? Great question, Lara.
That is a great question. It depends. It's going to depend on how you are set up as far as your business structure for tax purposes. So you can do it in kind of either way if you're a partnership or sole proprietor or if you're incorporated. But the way you do it as an incorporation is going to be slightly different than for the sole proprietors and partnerships. You do need to track what percentage of your home is being used for business use. A lot of those renovations, if you're doing it for like a portfolio or something like that, like you're staging a room, it'd be what I would call advertising costs. But again, when you do things like that, you need to make sure that you are tracking those things, and it's really good to get in contact with your bookkeeper and make sure that they understand how that should be categorized. Just make sure you document what you're doing.
Document is the name of the game, because you don't want to get caught off guard. So thank you so much, Danyel.
You are welcome.
It always shocks me the hour goes so fast, especially when we're talking about numbers. But if you need help with your bookkeeping, there's help out there. So get in touch with Danyel at Business Navigators. Danyel, make sure you go into the comments and put your information in there. And she is in the group, the Interior Design Business Forum. If you're not there, ask to join, and you can always tag Danyel if you have a question, which is awesome. There's help right in the group. And I do love the fact that you train people who want to do it themselves. I think that's such an important piece of your business, I'm sure. And when they get big, because they're doing it right, that they come back to you because now they were taught by you and how to set up a successful system.
Well, that, and even if they go off with somebody else, because, we're not married to each other, so you're allowed to leave. It's okay. I'll be sad, but if you do go to some,
because it's so hard to break up with your bookkeeper or your accountant when you just maybe want to go with somebody else, right?
It is, but sometimes your business changes, and maybe there is somebody that's a better fit, just like, with your coaching. Sometimes they're good for you at a certain level, and then they get to a different level and somebody else can take them from there. But when you move on to that next level, the transition is smooth.
Yes.
That's the important thing.
Yes, I'm just saying hello. As we're saying goodbye, more people are coming on, actually, which always happens. So, Hi, Jennifer and Gisela. Thank you for that information. And you're welcome, Camille, and you're welcome, Gisela. So thank you so much, everyone, for watching. I will see you next week on Weekend Wind Down with Business Coach Nancy. And thanks again, Danyel. And I love how active you are in the group, and I look forward to that continuing.
Thank you. Have a beautiful weekend, everyone.
All right. Bye, everyone.